electricity tariff in Nigeria is expected to increase following the country's latest FX policy and floating of the naira. Now, the impact is already being felt with the removal of the petrol subsidy. Wonuola Akanbi, Head Energy and Infrastructure Sales, Global Markets at Stanbic IBTC Bank, joins me to discuss the possible impact of the media multi-year tariff order review. Wonuola, thank you so much. Pleasure to have you in studio to talk to us.
Thanks for having me.
Now, certainly difficult times for Nigerians in general, and now, I mean, we know that the multi-year tariff order, looks at it, reviews the tariff, electricity tariffs, and we would see a review upwards. But it's coming at an interesting time. We're yet to hear from the federal government in terms of whether or not there will be an increase. There was a July 1st deadline that has passed. We're still waiting. But what are your thoughts in terms of how this could potentially play out?
Yeah, I mean, for the electricity companies, it's quite a tough one, right? Because right now we've seen, we're still seeing inflation numbers going up, 22.4%. We're seeing unification of FX rates. That's moved official prices from 460 levels to about 760 now, using today's NAFEX. And all of that basically, goes into the cost of electricity, right? So if you look at Nigerian energy sector, for instance, there's a lot of reliance still on fossil fuel. And then if you look at the power generating companies, they're likely reliant on natural gas. I know that all of this cost basically fits into the value chain, so from the generating companies to transmission, to distribution, and then to the end consumer. Right. So the question then, is who bears that cost, right? If the power companies are unable to pass that cost to consumers, that then means that it's either they have reduced margins, or the government basically then continues to provide more subsidy to the power sector. So it's clear that, I mean, it's a very tough one for them to navigate. We're also talking about, increase in investments into the sector, in upgrading the power grids, more, imports of plants and machineries for generating companies. They need to see more cost-reflective tariffs, to drive, to basically drive new investments.
Well, so speaking about cost-reflective tariff, there's also within the MITO, the multi-year tariff order, there's also the foreign exchange element to it. 441, we believe, was the previous exchange rate, is now 750. So obviously that's a huge jump. We've seen that with petrol, the subsidy removal of petrol prices, so just the whole allowing market forces to determine prices. So obviously that is going to be a sticky one. So we might see for certain classes of customers a significant jump. But talk to us. I mean, that this argument, the fact that look, it's what it is. We are now at somewhere around 750, so we have to adjust accordingly. Now, last year there was a shortfall of 208.7 billion according to the NERC, and the government had to foot that bill. Some might argue, okay, we're saving money now from subsidies, and maybe give or take between 200 and 400 billion naira every month. Perhaps that's some free cash for the government to fill up the gap in the meantime while we try to sort out the issues.
Well, for the government right now, they're also looking at other things like increasing minimum wage.
Other competing.
Yeah, exactly. So, but what is clear is that someone has to bear this particular cost, right? And it's a real cost. So it's not like it's something manufactured. So like they have to bear the cost. Yeah, you could argue that they've saved over 400 billion already from subsidy. They can channel in those funds, but that's likely left to the government to basically decide what's going to go on here. Because I mean, if you just again looking at the challenges that is being faced by this company across the value chain, you see that they've got high aggregated technical, commercial, collection losses. And that's largely due to the obsolete grids. So there's a lot of power loss from generation to transmission, and then even from transmission to distribution, and from distribution to the end user, right? And apart from that, you still have faulty meter readings. You've got meter tampering.
Apart from meter tampering, which I mean, in terms of the number of registered customers who have been metered, is still less. I believe we're up over 12 million registered, just about 5.6 or so. They have actually received their meters, so there's still a gap in that area too.
And then you have challenges with estimated billing and all of that. So So I guess what we're just trying to say here is that, it's not just foreign exchange, right? Like there's that
the whole value chain
the whole
between
value chain,
the
yeah.
generation.
Yeah.
And speaking about, before we go to generation, I mean, just to wrap up this issue of whether or not, we're waiting for the government to respond. But I mean, if anything, if what we've seen this government do with the petrol subsidy, look, we all have to bear, the costs, rip off the Band-Aid, as it were. Would you see that happening with this too? Because if the government says we're not going to bear the costs, this is an economy that we have now, market-driven economy, where we're going to allow market forces to determine prices, and everybody has to do their own bit, etc.
Well, going by the framework,
I guess to be speculative.
Exactly, you have to be very speculative, and just looking at everything that's happening at the same time, right? People, I mean, a lot of people are already complaining to say, okay, fine, you remove the subsidies from everywhere.
You're going to collect VAT now from the informal
exactly.
from the informal sector.
Exactly. So what are the palliatives? Are you increasing minimum wage? So I think that's what the government is trying to read. And saying anything now is highly speculative, and that's why it was very clear that the distribution companies had to make a pronouncement to say, hey, this has not yet been approved. Even though we saw people, front running the announcement, but it's clear that they don't have a go ahead, and anything outside that would be, like you said, speculative.
So let's talk about power generation on the other side of the value chain. I believe last year, according to the NERC, Q4, the federal government issued 50 new power generation licenses. Now we know that from the generation companies to the discos, the TACN, the challenges across the value chain. But now we have these new licenses, and I'm wondering, the system, the industry has illiquidity challenges. Obviously, they want cost-reflective tariff. They need to bring in more investments, etc. But with these new licenses, we still have all of them, 26 power generating companies, combined output of still less than or just under 5,000 megawatts. So I'm just wondering, what would it take to move the needle in terms of how we address these issues? We have more power generation companies. Will that make a difference?
Ultimately, right, and it still goes back to what we're saying. I think at the end of the day, it still goes down to the cost-reflective tariffs, right? That basically is the major driver of investment. Now we've seen a new act, where states are now allowed to basically, issue licenses or come up with their own framework. But it's, we haven't seen anything from any state in terms of the laws, and I think that's very key. That's a key catalyst to how this moves quickly. If you see the states, coming up with the laws, issuing out licenses, then you probably see, more investments coming in. But what you definitely see is that the investments will be largely based on the areas with high purchasing power. So places like Lagos, quickly benefit, more from this, than states with very low purchasing power. And then what do those state governments need to do? They need to basically see how they will incentivize this investment, either partner with a lot of other agencies that give grants on renewable energy, or get, concessionary notes from, likes of World Bank, just to stimulate the investment there. But yes, it's clear that the states have to, and outside all of that, we've also had challenges with, competency, issuing licenses to people who have the financial muscle to actually basically drive all of this, But
and perhaps also the technical know-how.
Exactly, yeah. So that needs to be, clear, while issuing out the licenses. But what is also good out of all of this is we'll see more investment in renewable energy, But again,
that's another component. I wanted us to talk about that too. I mean, we focus so much on, of course, on the thermal fossil fuel and all of that, but we don't talk much about the renewables side of things. I know a lot of investments are going into that, but do you think that perhaps we need to put in more energy? I know there's actually a blueprint from the federal government, but in terms of how we talk about it and how much investment is going into it, do you think that perhaps we need to do more of that?
Well, I guess it's to look at it from the lowest hanging fruits, right? Like, so gas will still be the major, generating component, right? Now, if you're looking towards solar and all of that, yes, there's a lot of grants and loans, but you still need that initial capex, right?
When I say this, my mind goes immediately to the rural areas. We know that there are, projects, many of them funded by, institutions like the World Bank and all of that, because these are people in rural areas their purchasing power obviously is quite low, but they need electricity. And how do they get that? So renewables, the government has turned to renewables to address the issue for them.
Ultimately, 100% agree with that. And like you said, we're already seeing that basically play out in the rural areas. But what we're saying is that, I mean, in terms of the general, consumer demand, like you still find out that gas will still be the major component, and that's where you see the bulk of the investment, going in through. And then for the renewable, again, if you want to get to that commercial state where, you're really, providing to the entire national grid, then it still goes back to the investment. You still need FX for the capital expenditure, so, and it still goes back to, are people paying the right price for it? Do you have the right transmission lines, in terms of the grids? Are you metering people properly? And are you able to basically collect, do good collections, across the value chain? And then the last bit is even for, people tampering with meters, are the laws sufficient enough? Empowering distribution companies to, give the right order of, collection from those guys, through. When you see
I know it's a very complex industry. Trust me. Every time I have someone here to talk about Nigeria's power industry, it's very complex and to navigate. Well, thank you so much for your time today, Wonuola. We appreciate your time on the show. Wonuola Akanbi, Head Energy and Infrastructure Sales, Global Markets, Stanbic IBTC Bank.